Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen.
Hi, I'm Kevin Cook in Cook's Kitchen. Well, last week I suggested that while a few of the indexes were breaking down, the big one, the S&P 500, would soon find support. Let's take a look at that chart I showed you last week. Here it is. This is from last Thursday, actually, and I drew some what I call demand areas that would overwhelm supply. 1540 to 1560. We were taking out the lows below 1540. While lots of other indexes were making new lows, but I thought that, hey, if this area doesn't hold, then a quick trip down to 1525.30 ought to do it. And sure enough, that's what happened. We sustained the lows at 1540, and the market has rallied since here to Wednesday, April 24th. All right, now I want to look at some internals on some of the weaker indexes. I want to look at the bullish percent index on the NYSE and the NASDAQ and a sector, the energy sector. Remember, the bullish percent index is simply taking all the stocks in a given index and looking at their point and figure buy signals or sell signal. In this case, we're looking, it's called the bullish percent index because you total the percentage of stocks that are on a point and figure buy signal. All right, first up, the NYSE. Not looking good here. You know, we saw the chart last week making lower lows, fighting to maintain any kind of bullish stance, and the bullish percent index is not that healthy here. So in terms of market breadth, we still have weakness here. All right, next up, the NASDAQ. This one actually surprised me at 76% bullishness for the NASDAQ 100 on the BPI. And you can see where it's been. You know, you get below 50, you start to trend very negatively in these bullish percent indexes. So the NASDAQ has its own challenges because if you look at the recent highs, last week we got up to 2860. Obviously, we'd like to get through there for a buy signal on the QQQs or the NASDAQ 100. And last September, we were up to 2880. So that would be confirmation, getting through 2865 and through 2880 would put me on a stronger buy footing for the NASDAQ 100. All right, next let's look at a sector, the energy sector. This one, terribly weak here, right? You can see down to 30% buy signals, percentage buy signals for the energy sector. And just on a 6-month chart here, it looks terribly weak. Let's back out a little bit and look at a 2-year chart to give us some perspective. So, things aren't as bad as last spring and summer swoon into June, and certainly not as bad as the 2011 major correction that we had where the stock market went down almost 20%. So the perspective here, the two things I want to point out is, one, the energy sector seems to be leading this idea that we're going to have another spring correction, more softness in the economic data, slowdown in GDP, and so the energy sector is getting ahead of that while the price of oil is also going down. So it remains to be seen if we're going to get the same kind of slowdown we've got in the past 3 years and a similar market correction. But the energy sector is one to watch. The other thing I want to point out about using the bullish percent index is, you really look between the peaks and the troughs, but you also want to follow the trend. So right now, buy signals are heading lower in the energy sector. It could certainly turn, but when it does capitulate, say below 20%, you're probably getting near a buy opportunity. So it's best to use bullish percent indexes, as a measure of breadth and health. And when they start to roll over, that is probably a downward trend, but you don't want to be selling just because they've fallen under 30%. All right, I'm Kevin Cook. Thanks for watching.